Okay, we're live. Let's test, make sure the audio is working okay. So let me know in the chat area. Hope everybody's doing good. We'll get started in a few minutes. Okay, looks like audio is working good. I'm going to put a little music on and we'll get started in about 2 minutes. All right, well, welcome everybody to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com, and welcome. All right, so go ahead and start typing in your stocks you want me to analyze using our proprietary software, the ART trading system, along with the OWL, PTF, and TLM, and we'll get you results on what you're looking at and tell you basically if you should be long, short, or out of the market. All right, so today is June 23rd. All right, we're into summer. So here we go. All right, a few administrational items before we get going here really quickly. I have to inform you of the risks involved in trading. There are risks, like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you do need to be aware of the risks, and that's important, and realize that past performance in trading does not guarantee future performance. Same thing with investing, of course, as well. And then finally, make sure you know how to do risk control. We can help you with that. We've got a number of courses on that, on money management and how to protect your downside as best as possible. But there are inherent risks, and we deal in a realm of probabilities. So there's no guarantees, and you have to realize that. So always trade with money you can afford to risk, called risk capital. Really important. And then finally, since we're going to be looking at stocks and ETFs today and making recommendations, don't just take them. Check with your financial advisor or whoever manages your money to be sure they're suitable for you. There's a lot of variables that go into that type of analysis. So make sure that these trades are suitable for you. That's really important. All right, so here's a couple books you might be interested in that I've written. We've got a new book called The Art of Trading coming out, and that's going to be at the end of the year. That's an update from my first book that came out on The Art of Trading in 2008. So that is being published by Wiley. My next book called The Elliott Wave Technique Simplified, really popular book on a form of technical analysis called the Elliott Wave, and we'll probably use that today as we look at stocks. That was published by McGraw-Hill, and that's out and available at Amazon. And our links for all these books will be not only on our website, but when I do the recording timeline, I'll put them up in the recording as well. And then if you need help with that risk control issue, Money Management for Traders and Traders Money Management System are there for you. And then finally, Survival Guide for Traders is basically a reference manual on how to run your trading business right out of your home like a professional hedge fund. All right, we're going to be using proprietary software that I created over the last 30 years of trading the financial markets. We have software that goes right on the charts. That's the ART, AL, PTF, TLM, and ERI. Those are indicators at the bottom of the chart. The ART is actually looking at price structure. So those types of things draw fractal triangles and so forth on charts and give you entries and exits. We also have scanners. We're probably not going to use those today because we're just going to look at the stocks you're typing in. And then we have risk control software at the bottom. So we'll definitely check out all that. And then finally, give us a like right now. All right, like, subscribe, and share. Ask your friends to join us. The more people we get here, the more stocks we can uncover and the more opportunities. The great thing about this service is somebody may share a stock with us that we weren't aware of, and it may be a really good stock to trade. So you're going to pick up a few, I think, every week that are new. But the more people we get here, the better. All right, because that means more stocks we can look at more stocks and have possibly more opportunities. So give us a like. That helps as well, and we would appreciate that. All right, so let's get out of here and run into a stock here. I'm going to take a look at Bitcoin. Before I jump into this, I want to just go over a few things in case you're new here or watching the recording for the first time. Basically, what you're looking at here is my software, all right, installed in NinjaTrader. Now, our software works in TradeStation, NinjaTrader, MultiCharts, MT4 and 5, and eSignal. So it's available in all those. But what we've done is we put all our indicators on the charts, and down here, all right, you can see the OWL, the PTF, our trendline master, and our emotional reader index, which measures greed and fear in the market. And then up here, you see triangles on charts. And this basically is our ART software along with key pivot points we call ART reversals. So all that's going on each chart. Now, the next thing we do is we load 3 charts in the platform that you can see in front of you. And on the chart on the left-hand side is the 60-minute chart. And this means each price bar represents only an hour, 60 minutes. That's considered a short-term view of the market we're looking at. The next chart is a daily chart where each price bar represents a full days of activity. So this is kind of the typical chart you will see if you go online and look at a chart. Usually they're daily charts. And then finally, the weekly chart on the far right-hand side is a long-term look at the chart. But each price bar here represents a week of trading days. So that's 5 days built into one price bar. And that gives us a good long-term look at the different markets we like to look at. And notice we have the same symbol on each chart. So these aren't different stocks we're looking at. It's all the same stock across different time frames. On the far right, we have a data window here, and that's over here for you. And then up here, we have our scanners. Now, we're probably not going to use the scanners today, all right? But they're there for us to search for stocks when we actually are looking for new trades to trade each and every week, okay? So keep that in mind. All right, so let's go ahead and take a look at GBTC first. I see markets, you guys are typing stuff in. That's great. I'll get to those in just a minute. All right, so GBTC is an ETF, exchange traded fund, for Bitcoin. And the Bitcoin market took off this week. And as you can see, it moved up quite a lot. And we were looking at this last week. And remember we said, all right, it would come down into this retracement zone. And then we wanted to see some bullish activity. Well, notice what happened. The OWL immediately turned green. That's the bullish activity we were looking for. This turned green on the 60. And we have green PTFs now across the board with green momentum. This is once again a buy, okay? So we want to put this down right away. This is our first stock I wanted to share with everybody. It's actually an ETF, but it's considered to act like a stock. And basically, this is a good one. Now, our short-term price target zone is around 25.86, 25.86, almost $26, up to 37. But my feeling on this, looking at the long-term charts, is this is a major bottom. And now we're moving up here. And you can put your stop right under here, okay, right in this level here. And I'll give you an exact price on that in just a moment. All right, so that's a low of 1286, or so 1285 is where your stop can go. And so there it is. There's no options on GBTC, unfortunately, so you do have to trade the underlying asset. All right, let's see what's cooking out there. Let me back up here. All right, Mark, how are you, Mark? He wants to look at MANU. MANU. Give that a second to load. All right. Also, too, when you're typing in stuff, let me know if you're already in the position. You can say long if you bought it. You can say short if you sold it short. You can say, if you say nothing, I'll assume you're not in it. Okay, so let's just do it that way. All right. So this is looking better over the last couple weeks, right? So we've had a nice move up. Notice here on the weekly chart. Now, this is kind of something that I pay attention to. This is a form of technical analysis where you have what we call an inside price bar forming. That's a very powerful signal in itself, because whichever way the market breaks out next week, if it goes above that, you're going to be good for about 2 to 5 price bars on this time frame. So that means 2 weeks to 5 weeks of bullishness. If it breaks below the low of the inside price bar, same thing, but that means 2 or 5 weeks of bearishness. So that's kind of a powerful signal. Now, my guess on this, based on the lower time frames, like the daily here, is that we have a green PTF. Now, this is an indicator that I designed and created that basically has a 75% accuracy rate. And when it's green, what it's saying is there's a 75% probability it will get above that level there, that the high that created the green PTF. So that's a good sign. So I think the breakout's going to be above there. Also, too, we've got green here. So same thing. And that's the same price level. So this was looking pretty good. You can go in as a buy now. If you wanted to wait and see if prices get above that inside price bar, you could. But I'm going to put this down as a buy. Let me just check one more thing and see if there is enough history. Okay, so not too much history, but it does look like it's going to make an all-time high. I would put your stop under here, because if you're going here, you need it to be there for the 2-to-1 risk to reward. So this would be a short-term trade on that. So I'm going to put this down as MANU, and that's a short-term trade, and that is looking really good. So the way we use the PTF is basically when you clear this area, you've reached the target, and then you just trail your stops right up under the price bars, okay? All right, just in case you get a little more out of that. All right, so thank you, Mark. That's a buy, all right? The spider, let's see what's going on in the S&P 500. And this is for Jim. All right, as we said, the markets still have gas in them. In other words, they're still going up. And let's take a look here and see. So short term, we still have a green PTF. So that means the market is likely not topped. I can say that with a 75% probability, so not 100%. It looks like we're in a pull down here. So we're kind of retrace a little bit before it returns higher. And this is red, which is interesting. So eventually, even after the next high on this chart here, we should start to see a rollover and sell off, but we're not there yet. Okay. So let's just take a look and see what kind of retracement are we looking at here. So the market's currently pulling back. You can see it now. It's a little soft this morning. Let's draw a quick retracement and see how far back this could pull. All right, I'm going to use the daily chart and draw a fib here. I'm going to go from here to here. And I have a specific reason I chose those 2 points. And if you're interested in knowing how I draw fibs, because I don't do it the way everybody else does it. I do it based on Elliott wave count and our OWL. And basically, and we have a course on that if you're interested. But basically here, we're looking probably at a pullback up to 423.44 to 410.40. So that's kind of where we think it's pulling back to. So I probably would not go into this one yet. If you're in it already, stay with it, okay? But you better have your stop, I would say, under the second pyramid here, okay? So we're kind of getting that pullback now, and that's the spider. All right, so let's see what else we got cooking out there. Baba. Haven't looked at that one in a long time, have we? Little Alabama. All right, let's let that one load here. Okay. Ooh, some things I like about this. Right off the bat, what I like is you're not overpaying for this because it's sold off. Look at the big sell-off. That started to occur in 2021 and bottomed basically last year and has been treading sideways for quite some time. Now, a couple things here. I'm going to just open up this chart just a little bit, and you can see the sideways motion, right? So there are a couple things you could do here. You could wait for a breakout here because technically, it's in a channel. And the difficult thing about a channel is that you don't know how long it can last before the next trend emerges. So if you just go in, you kind of can get stuck in that channel for quite some time. And that's not a very good use of your money. So keep that in mind. Now, there's another possibility of things you could draw up here. You could probably draw a pennant. Let's just see if that works. I'll go off those two price bars, something like that, maybe. This is another form of technical analysis. So not the straightest of lines, but you get the idea, and you can draw them more accurately on your charting platform at home. But we're kind of at the apex of that pennant, aren't we? So it probably is going to push out pretty soon. Question is it going to push out up or down? Now, let's go to the lower time frames and see if they give us a clue to which direction that could push. Well, we've got green here. We've got green here. The short trade on this little leg down, okay, is been stopped out. Now, these pyramids are places where we put our stops at the top edge of that pyramid or the flat part. And these points, okay, confirm it when they're exceeded by price. So basically, in this case, you had lower highs, lower lows, and so therefore it forms a pyramid, provided the momentum is sufficient in the pattern for it to be created. So that has been stopped out. As you can see, prices got above the flat part of the triangle. So we no longer have an active short trade. This is green and this is green. We do not have a new pyramid. Now, we may get one form in here, which would be great, okay? But you're not going to know that until we start seeing some more movement up. We've got red here and we've got green here. So my guess is that we're kind of still meandering sideways. And my guess is we're going to pop out to the upside on this. I would probably wait for a pyramid on that daily chart like I drew here before I do anything. But keep that on the watch list because that is going to be an outstanding trade, I think, to the long side. I would just like it to pop out. And as you can see here, we have an active bearish pyramid here with a red owl here. So we're still kind of pulling back a little bit. It may end soon. All right, but so far, I just stay out until that ends. Okay, so that is BABA for Jazz. Welcome, Jazz. All right, John, let's see what we got on CBAY here. Give that a second to load on your end there. Okay, so let's see. Nice move up off a bottom here. I'm going to just open this chart up for real quick. All right, so we got history back to 2015. Kind of a, tough chart to get a good grasp on the Elliott wave on this chart because you had it looks like an impulsive wave here, but then that failed, right? So you never had a wave 5. So there's usually 3 waves in a trend, and the 5th wave exceeds wave 3 and ends, but we didn't get that. So what do we got here? Well, possibly a 1, a 2 in an overall pattern. And we may be in 3 right now because technically we have an uptrend, and that could be a 1, 2, 3 inside the uptrend, right? So this could be a major 3, but there's always 5 waves in a impulsive wave. So this could be the smaller waves inside here. So that could be it. So, all right, kind of looking like a long trade. We got bullish owl here, but we're pulling back, right? All right, so, oh boy, okay. So we've got a bearish pyramid here. So we're definitely pulling back. Let's just get a quick target on this. and see where the possibilities could lie on this. Okay, we're pretty much in there now, but you know what? So yeah, that looks pretty good, I'd say. So I think we're getting into the target. So this would be a pullback area in here. All right, so this is an impulsive wave here on this time frame 4, and we should have 5. So okay, but we have a red owl, so we're still pulling back. And look at this, we have red PTF here, and it looks like we have an active pyramid over here on this chart. So it's still coming back. All right, and the correction according to the red PTF on the 60-minute time frame, ooh, it just went below here. Okay, check that out. So that's going to turn that yellow. So we got kind of a new low on this price bar today. So it's still coming down a little bit, but it may be soon over because it is in the target range. But let's not go, I would not go into that at this point. All right, let's see what else we got here. All right, John, you're long. Okay, IWM. IWM. That is an ETF. All right, let's see what we got cooking here. All right, so we had kind of a top here, didn't we? A retracement top here. So we're kind of looking at no more long trade here and here. We've got a little bit here. Okay, so let's see what's going on with this bad boy. Let's open up that weekly chart. So we kind of finished a wave 3 here. So we're kind of in a wave 4. Looks very much, of course, like the overall market, and it should because it represents it. So to me, we're kind of in a complex correction. I do not think the correction is over. I think we're going to head back down on that. That's kind of the way I'm seeing that right now. But it's kind of messy. And you can certainly see that that's kind of a messy chart right there. Look at that, sideways. So I would probably stay out of this at this particular point. And let's watch and wait and see how it breaks. It's got to get above here to prove any type of bullishness. And it's got to get below here to prove any type of bearishness. So this is kind of like in the neutral zone. Remember Star Trek when they talked about the neutral zone? That's the neutral zone. All right. So you kind of don't want to go into a market when it's inside the neutral zone unless you're going to scalp it. All right. So that's IWM. All right. And RSP, let's see about that one. Now you're long on that. So you're pulling back in, I don't know. I don't know if I would, you can stick with that because you can put your stop a little bit lower and see if it bounces back up. But I would not recommend the trade right now. All right, RSVP. Let's open up that weekly chart here. Similar thing, okay? Exact duplicate. Here's your COVID low here, and here's your sideways unwinding market. All right, same thing, almost exactly the same situation. All right, got the red owl here, green owl here, but you're oscillating back and forth, but you are pulling back currently, and you're pulling back currently here. This is red. So we're almost at an inflection point. An inflection point basically is 50% from the recent high and low. So yeah, that's here. Usually the market, and basically it's a fib retracement as well. So usually the market will respond when it gets to an inflection point. So if it's profit taking only, you'll get a bounce. If it's not profit taking and the trend is down, it'll take out this bottom. It won't bounce. All right. So I would hang on to it, see if you get the bounce. If not, put your stop right below that area there. Okay. So right around, what is it? 138.80. Okay. That's RSP. All right. Alexander, how are you? MARA. Let's take a look at that bad boy. And you are long at 1196. Okay. So let's see what I like about this, because I do like some things about this. All right, open up this weekly chart here. All right, so it came all the way down. All right, and now looks like it may have bottomed here. And what I like, this is green, so that's good. All right, this is not red. That's good. It was red. See, it went yellow, and that means it made its new low, but the momentum was not strong enough to keep it red. So that's a good sign. All right. In terms of target, where is this thing going? Well, we can certainly hope it'll get above here. If this is a bottom and it takes off, But you know, kind of what I do sometimes on these things is I'll take a look at these charts where the Elliott wave isn't clear, because this could be a 1 and this could be a 2 or something. But let's take a look here. Worst case scenario is probably 33.5 to 52 on this. So in other words, if it just retraces up to the normal profit taking fib zone, you're looking right around there. Okay. And it's at 12 bucks. So that's a double your money plus, right? So there is possibilities for that. Okay. Next thing, let's just take a look at the lower time frames. So we got a bullish pyramid. The bullish pyramid actually had you in a lot earlier on this leg up after the bottom here. So hopefully you got in there. Let's see where you are in. Hold on one second. You are in 1196. So you got in recently, okay? You got in after it broke this level here or here. Okay, not bad. All right, you got a green PTF here. So more highs coming on the short time frame. Now you will get pullbacks, so you got to decide if you're going to basically take quick profits or let it ride until you can try to get into that target zone on the weekly chart. But that could take a long time, because don't forget that's a weekly chart. So I'll leave that up to you, but you're going in the right direction. All right, CCJ, let's take a look at the next one here. And you are watching this. Okay. All right. So a couple things about this one I need to explain. All right. So if we open up the weekly chart here, we've had a big move up already, right? Now you've also had one pyramid to the upside, 2, 3, 4, 5, 6. That's excessive. That's a lot of pyramids in a trend. Since the this bottom here, you've had 1, 2, 3, 4, 5. All right. So the problem with this is that it's extended. We're also starting to see, let me just check this a little bit. You're also starting to see bearish divergence in the owl, right? So if you get in here, is that more risky or less risky than if you got in earlier down here? It's more risky, right? Because what could happen is you could get just a normal profit taking pullback after a big run up and get stopped out. Or you'd have to have your stop way the heck back here, and that's too low. Okay, in terms of that's 50% lower than where prices are. So it doesn't make sense, right? So on this one here, I'd say that's risky based on that time frame. All right, let's take a look at this. Same thing here. You've already kind of had a run up here and you're pulling back already, which is kind of interesting. This one says you're pulling back here, but this has a green PTF. All right, so here's the deal. The only tradable time frame here is the 60-minute, because there is a possible scalp trade based on this indicator. Has to stay green. If it turns red, okay, that sucks out the scalp trade opportunity. But it's still pulling back. So when this goes green, and if this stays green, that is basically saying that prices should return short term up above 33. So it looks like we're going to make one more high before it sells off. And that's your only opportunity. But you're going to have to use the 60-minute chart to capture it. You understand? So the idea here is you don't go yet, because this is bearish. You got a bearish pyramid. This is bearish. You got to wait for things to turn around. The other thing too on this to do real quickly, where should that turnaround point be? Well, we're kind of in the target already, so it could end at any time, but it has not ended yet. So no trade yet. Possible scalp trade, provided you can get in early enough where the risk to reward makes sense for the PTF target. Okay. Thank you. I'm not going to recommend that one because, you know, it's only a very short-term trade and you'd have to have data for the 60-minute time frame. All right, let's move on here. All right, what do we got here? Stuart, how are you, Stuart? FIVN. FIVN. Let's load that bad boy. All right, so first thing I'm going to do is I'll open up this. Oh, look at that beautiful chart. So very impulsive wave on the weekly chart. Okay, boom. Okay, here, perfect example. Is it more risky to get in here, or is it more risky to get in here? Here, right? because this is what can happen. So remember that every time you chase a trend and get in late, it's actually a risky trade. Okay, so keep that in mind. All right, so now we do have some things, possible bottoming here. I like that. Okay, we got a little green peeking out here in the owl. I don't know if you can see that at home. Let me open that up. Maybe you can see it better. Kind of hard to see. It's only one price bar, but it's a little green on the owl. PTF's yellow. Okay. And the nice thing is no longer an active bearish pyramid. So that was stopped out. Okay. So if this is a major bottom, then this is going to be probably a great trade, right? However, we need to see a little follow through. So on the move down, this was a big level here. Okay, that was a support level, but now we got one here on the way up. So I would like to see that break that support level here, or resistance level, I should say, before going long. And that is a high of 86.49, and we're at 74.96. We're close, but that would kind of give me a little bit more confirmation, because here's what can happen. It could sell off again, and then you have lower lows and lower highs, right? Here and here. And if it goes above here, then now you have higher highs and higher highs. You see the difference? Okay. So breaking above here, uptrend, breaking below here, downtrend. We don't know which way it's definitely going to go yet, do we? It's looking positive, but we're not sure. Let's open up that daily chart and take a look here. All right. So this kind of indicates green PTF and green. So we got bullishness here, not over yet. But the bullishness, according to the PTF, says it's only going to go above. Ooh, it looks like it's going to go above this high. So chances are we're going to break above here. That's a good sign. All right, let's go to the 60-minute chart. All right, red owl. All right, so here's how I would play this. Now, I would not consider going long if we had green here and yellow here. I would not consider going long until we break above here. But if I wanted to sneak into this market early, and I'm getting a clue from here to here that we're going to go above here anyway, because that's the high here, right? Then I'm going to try to get in early. However, I got this baby red over here. So we're still pulling back. As soon as this goes green, and if this stays green, I'm going in. Okay, that's how I would do that. But I wouldn't go in yet. Okay, not with the red owl on the 60-minute. I'd like to, and that could change in an hour or two. Okay, it's very close. So it could be good today, but I can't recommend it right now. But it is a good one, I think. All right, and that is for Stuart. All right, GH. Let's take a look at GH. All right, so, okay, this is also interesting. So PTF target way the hell up there, okay? But you always got to follow price activity. And that's what the ART system does so well. So this would have been, to the downside, pull back, not much history. We matched its bottom. This is always a great chart when people talk about the advantages of buy and hold versus trading. So if you bought back here in 19, you went all the way up, but if you held it and didn't get out on signs of weakness, which is what we do in technical analysis, you'd be right back at the starting point. So you could have traded to the long side and the short side. So, all right, that's the case for trading versus always just buying and holding. There's a place for buy and hold, but when you look at it like this, if you want to be more active and less passive, trading's great. All right, so looks to me like we've got a possible almost green, but not quite. We did take out the pyramid here. That's a good sign, because those pyramids weren't taken out for a long time, almost 2 years. So that's at least a good sign. We've got green over here, and we've got green. Okay, so you have two green PTFs here and here. Little red owl here. So again, here's why I use the multiple time frame analysis. All right, I'm seeing a potential for a long trade. So the only reason I take a long trade is if I think this is a bottom, right? So I'm seeing that as a potential bottom, especially since this is going green. This has given me a buy, all right? Boom. But this is red. Now, I imagine when I got my first buy here, this was green because it was green over here. So probably could have been long already with a stop down here. Actually, the stop would be here because you always put your stop at the very, very bottom until you get that first big pullback, right? And then you can move it up. All right, so that's kind of the deal with that. Problem with getting in now is this pyramid here, okay, is basically the pyramid on that first move up. And on the first move up, again, you got to make sure if you're going to use the pyramids that they're below a fib retracement, because you get usually a nasty pullback after that first leg up. And that pyramid is sitting right in the fib area. So you don't want to use that pyramid. Problem is, you know, that's 16 points to put it at the bottom down here. So what do? Well, this is a late entry. All right, you got a little red here. Maybe you'll get a little pullback more, and then we start getting movement up, and that may help. I would do an option on this. Okay, if you think this is a good long-term situation and the stop's too far away, then just buy a call. You know, and there's option software out there that will tell you the best possible one you could get, but you want to make it almost like a leap because you're kind of thinking this is going to take off for a long time. So that's kind of the way I would play that. The nice thing about the call is you can synthetically control your risk through the option. Just don't pay more for the option than you can afford to risk, which would be roughly what, 2% of your account size. All right, so that's G8. All right, CME. CME. All right, let me just open up here. Okay, so we've had a big impulsive move that ended. There's your COVID low here. All right, then you had one more high, just like basically like the market itself. All right, so you know, some people believe the market's going to do this. I think the market could do this. And I see some more upside short term, but then I see a rollover. That's kind of what I'm thinking. All right. So, all right. Let's see. You didn't tell me if you wanted to go long or short or what you were doing with this. So I assume you're just thinking about it. Yeah, I don't see an opportunity there on that, on the CME. Okay. Let's try Z. Okay. This actually looks kind of interesting. All right. Another one for buy and hold, right? Up, down. All right. So in 2 years, you made nothing. All right. So pyramids have been stomped out and we've got new pyramids. We've got green. We've got a 3. We got this is not a 3. That is a 1 because the retracement was way too deep for a 4. So that's 1, 2. So we could be going on this. All right. This I like. And I like it because you also are getting in right after a bottom, and it's proved itself because it's taken out this pyramid, which was a support level, and this pyramid, and it's created new ones. So good. All right. That's a good one. Let's just see what's cooking down here. Okay. So you got a situation there. All right. So now you got to ask yourself, if you're in this for the long haul, all right, you want to put your pyramid, put your stop. Wrong one. Hold on. You want to put your stop. Give me a second. Sometimes I click on the wrong fib tool. All right. So you want to put your stop below 34.90. Okay. That's where I'd put it at this particular point because you haven't had a really super big pullback. This was pretty good. So that's good. But I think you can go even higher than that. Yeah. The reason I'm saying that is you got 1, 2, 3 pyramids in a row. So you're going to get some profit taking here pretty soon. So you got to have the stop far enough back. Okay. But I'm going to put this down as a buy, but I'm going to put it down as a long-term buy. All right. So I'm liking it long-term. Okay. All right. Let's see what else we got here. Oh, last week we looked at UNG. This is the ETF for natural gas. I wanted to look at it again because I kind of put that on a watch list. So natural gas is sold off. even though those in California may be paying out the nose for gas, but it has sold off. But what I love about things like this is a lot of people will look at this and they'll dismiss it. But I look at it as opportunity, because if the trend changes and I can get in early, then that's a home run. And I love getting in early, because if I get in early, I can put my stop at the very bottom. And that way, the only way I get stopped out is if I was wrong on the bottom. Now, that's where I want to be. I want to get stopped out if my analysis is incorrect. I do not want to get stopped out on volatility, right? That really stinks, doesn't it? When you're right about an idea, but the market stops you out because you had to put your stop too close because it already got away from you. So the nice thing about getting in early is you can put your stop at the bottom. Now, a couple things here. All right. Boy, this is interesting. Okay, so this is green now. It was not green last week. This is green. Okay, so that was good. So last week, I think we had some red over here. I'm going to say a couple things on this. If you were chancy, okay, then you could go in now early. If you are a little bit more less chancy, I'll say, wait for it to clear this top here. Okay, so I don't see any red except on the weekly chart, and that is a little bit of a concern, because you can always get one more low. All right, that's possible. But the thing is that if you hit this right, you could get to 16 to 23, and we're at 7. All right, so even if you waited, you'd still get a great return. So I'm going to leave that up to you. I'm going to put this on a buy list for those that are chancy, but certainly nothing wrong with waiting for it to breach this high here, which is $7.72. So at $7.73, you could have a limit order sitting right there to enter. Or you could go in now, because the reason I say that is because it looks like a fairly bullish move is starting underway, and the 60-minute chart is bullish. Okay. So I'm going to put that down as a buy. Cool. But not necessarily for everybody. All right. Now, let's see. We covered GBTC. I got to tell you, gold's an interesting one. I want to cover this a little bit. A lot of people, if the market sells off, usually go into the metals because that's a form of safety. I'm not so sure in this new environment we're in now. I think my thinking has changed on this a little bit. I think you may see people going into cryptocurrencies. So keep that in mind. Now, what's interesting about gold, this is a weekly chart. So this is a very long-term chart. So in 2011, we had a 3, right? Then we had a long 4, lasted to 2016. And now we had a 5, and we did hit the target for 5. But this is green still. So we're not done going up. So you could hold gold. But what I find kind of interesting, if I think the stock market is in peril, and it's just a matter of time before it sells off, then I would expect gold to go through the roof. And it certainly could. It could go up to 244. But it's not like you're getting in early at this point. So that kind of an interesting dynamic. Notice how it went up so much here. Okay, everybody, the financial crisis, everybody ran into gold. And then when that kind of looked like it was okay, they came out of it and went into equities. All right. Now it seems like it ran up earlier during COVID, okay, which is, of course, natural. But, during COVID, Bitcoin was not as mainstream as it is now. So I'm wondering if the reason it's hovering here with maybe the possibilities of one more high, if the market sells off, like I think it might later this next year, rather, then I would probably think that this should take off like no tomorrow, right? But I'm not seeing that. I'm only seeing a possibility of higher highs in the target zone. So I think cryptocurrency may steal a little of the action that you would normally see in some of the metals like this. Just my opinion, okay, or speculation, but that's kind of what I'm thinking. All right, so I think that's it. I think I've gone through them all. All right, did I miss any? You guys came up with good ones. So let me just recap what we've got so far. All right, GBTC, we looked at that one, right? And if you came in late, let me just bring that one up again. GBTC is the ETF for cryptos, and that took off, but I think it's a long-term situation here because basically it rebounded and then took off again. You'll see some profit taking at some point, but I think at least 25.86 to 37, and I think this is a major bottom, and I would definitely try to hold that as long as you can because I think it's going to take off. So that's GBTC. So that I have on the buy list. All right. MANU is one we looked at, right? Let me bring this up. Okay. So we looked on this a variety of different time frames. So the time frame we like this best to trade is the 60-minute chart, okay? And we're not going to go long until this turns green. But basically, we're going to scalp it up to here, and that's it. Just a quick scalpy trade. All right, and then Z was another one. And this is one we liked for a long-term trade as well, okay? Because it looks like we bottomed and things are going up. Again, stop loss placement is everything on these because you have not really had, this is a pretty good pullback. That was good. But I'm thinking after this leg is done, you're going to get a big profit taking here and then up. And then once it clears this again, you'll get the herd coming in. All right, so that's actually pretty good. So get your stop below 34.90 on that one. And then UNG, which is the one I just showed you, okay? UNG is the natural gas one. And again, this is one you can go in early or wait a little bit, but I think it's going to be a good trade, okay? So there you have it. Let's take a quick look at some of the intraday time frames and see what's cooking on this. So, you know, we have a day trading room. So I have the software loaded on all the intraday charts that I like to trade. And I trade the micro futures. All right. And basically, same type of analysis. However, the time frames are different. So this, believe it or not, is a 15-second chart. People usually go, oh my gosh. And then this is 1 minute, and this is 5 minutes for the long term. But believe it or not, we're so strict in how we trade because we're so into structured trading that sometimes we have to wait for an hour to get our setup on these intraday time frames. So as you can see, the MES is pulling up. You can see it on the 15-second time frame. All right, pulling up here, and we have a green PTF on these. So it's going higher, okay? But the ideal entry would have been near the bottom. Notice here, see, big pullback, same type of thing, bottom, and then it should go. So this could be a long-term situation if it gets above here. Short term, now you'd have to trade the 15-second on this. All right, crude oil, let's take a look at that bad boy. That's trending up as well. Okay, this would have been a nice trade in the beginning here. So that's crude, you know, creaming up to the upside. But again, this is a correction in a downtrend because the 5-minute chart has a red PTF. So it's probably going to go up higher right around here and then turn around. So there's a lot of profit potential left on a short-term time frame. And then finally, gold here. All right, that's coming down as well, but maybe a bottom. So again, same type of thing we do on the other charts. Notice the bottom is here. We got a possible early entry for a new trend up. This is pretty strong still. So there's a possibility for just a fib retracement at the very least, and we can draw that in. So that could be the target zone right here for a short-term trade, okay? All right, Sergio, gold. And he's asking, should I take a leap on gold? Let's take a look at gold. All right, it's not yeah. You could take a leap on that because we still think it's going higher. Okay, um, if you have our software, what you want to do is don't do the actual option yet until the 60-minute chart turns bullish because that's pulling back right now. Okay. Yes, we think it's going higher. Okay. But it is pulling back. Looks like I just lost connection on my webcam. So I think that just went off. Hopefully you can still hear me okay. All right. So in any case, with that here, all right, you could buy a leap, but I think maybe one of those other stocks might be better, but you certainly could do this. You could buy a leap in GBTC too. Okay. You could do that one as well. But this is still pulling back, so I wouldn't buy it yet. This is the advantage of having the right tools spread across all the different time frames because it's bearish here. It's still pulling back. So wait until that's done and you might be able to get a better price on your option. Okay, let's see. SOFI from Frank, SOFI. I have a very small position after taking profits, looking to buy a pullback. So you got in, you got out, and now you're thinking about getting back in. Okay, spoken like a true trader, Frank. Okay, very good. All right, so Frank, this is where you have to have the right tools. Okay, so Fibonacci's are telling us it's in the target zone. This is green. This is a green. So smart looking for a long trade. Good idea. But look at this. Still pulling back. Okay, so we got to wait for this pullback to kind of confirm itself being over. Now, how is it going to confirm itself? Well, this has got to be green. This has got to turn back. This has either got to be yellow or green. And right now it's red. So I'm not going to go long when that's red. So this little pullback, you may see a little bit more, could come down here and then go. All right. So there you have it. So I would just wait for the 60-minute chart to be more bullish. You're in the target, okay, already. So you're good. Sergio, my pleasure. My pleasure. All right. Well, I'm going to wrap it up there today. Okay. Great session as always. And you guys are super. So we did find a few. Once again, GBTC, MANU, Z, and UNG. And we'll be back here next week. And bring a friend. Okay. The more people we get here, the better it is for all of us because we can look at more and more stocks. All right, so I'll put a little music on and then we'll end the session. Okay. Oh, Al. All right, Al, I'm only going to do two, okay, for you because we're going to end here. ETR, you must have just gotten here. ETR, I'll do that for you. Okay, so ETR is looking, I don't know if you're going to go long or what you're doing on this, but you have red PTFs in the short-term time frame still pulling back. After the pullback's over, green PTF, so looking for maybe more highs there at some point. But the problem is this PTF can remain green during the entire correction. So you got to trade the shorter time frames. Okay, NKLA, let's see what we got over here. Okay, well, if you're short, you're fine on that. Okay, so here we are here. And okay, so this one looks like it could be a potential for a long trade. This is actually a good one, but it's a penny stock, so it's $1.28. So some people don't like to trade those, okay? But the liquidity looks pretty good. The 60-minute chart is actually fairly structured, so the liquidity looks good to me on this one. So on this here, if we lowered this, probably if you're getting in early, this is not a bad trade, folks. Okay, if you're getting in early, you're in pretty good shape. Now, here's what I would do. This is red. We're kind of in a pullback here. So I would not go in until this turns green. And I think probably you're probably going to be, you're in the target. So I would imagine at any time this thing could turn into No, the 60-minute chart can change in a couple hours, you know. So I would say this is pretty close to being good. So let's put NKLA on the watch list, and I'll bet you next week that'll be a buy because I like that one. All right. So what I like about it is Al waited to find one that's bottoming so you can get in early. It looks like these support levels are broken. We do not have a pyramid. If we had a pyramid here, I'd say go, but we don't have a pyramid. I imagine one will form in here. Okay. And then you'll be off to the races. All right. So good potential on that, but I'd also wait until that owl on the 60-minute chart changes. Okay. All right. We'll take a quick look at Root, ROOT. See what's cooking on that one. Alexander, that one is for you. All right. So what a jump, right? What a jump on this. All right. Super. And notice here, okay, you're getting in close to the bottom, which we like, right? This is green. This is green. This is green. This is green. Stop on the daily is way the heck down here. Now this is extreme, okay? So that creates a lot of volatility. So if you have your stop too close, you're going to get stopped out. It's going to make more highs. But also too, if you went from 5 to 12 and put a stop under here and got out, all right, so you made a ton of money. But here's the problem, all right, is that whatever this thing comes down and then takes off again, and then you miss the trend because you got out too soon. So it's always that a battle. You know, the logic says, okay, well, I got in early. I made 100% on my money. The logical part of your brain is going to say to get out. The tools are telling you to stay in. Okay, that's the thing. So, you know, if you remember back when Tesla was like, you know, a very small stock in terms of price. All right. Every time it doubled its money, if you got out, you would never make it to the end of the big run that Tesla had. And that's the problem. And it really is tough emotionally to stay in profitable trades. I think it's much harder to do that than stay in ones that are kind of, you know, marginally profitable, because the logical part of your brain kicks in and says, take that profit. But the tools say no. But it means that you're going to have to endure the profit taking pullbacks that are normal in any trend. So you're going to have to give back a little temporarily in order to get to new highs. And that's hard for people to do. And I get that. Hard for all of us. I even struggle with that as well. All right. So I like this. Tools say stay long right now. I don't think I would put, let me see if I'd put some, let's see if this would be a good one to recommend here. So we got this and this. We're filling the gap a little bit. You know, the ideal entry would have been down here. That's the problem. But this has got a, I'm going to say this. It's almost green here. I'm going to say pretty much so. Problem is you'd have to put your stop here. I don't, I would probably do an option on this, do a leap and not worry about the stop because it's already gotten away from us. Because your stop would have to go way the heck down here. And look how far, that's 50% away. So I'd probably do an option on this. But yeah, I'm gonna put that down as a buy, but with an option. Cool. All right, everybody. Great session today. So we got quite a few of them today. And I will post the timeline on the recording by the end of the day. It takes me some time to get that done, but I'll get it done by the end of the day. And you guys have a great weekend and a great week. Summer is here. And we just had the longest day of the year yesterday, or 2 days ago, rather. And gotta love those late nights, right? All right. So thanks for being here. And you guys are super. And we'll see you back here next week. Take care.